Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, April 21st, 2020, and this is the daily report for gold and silver. We had an utter roller coaster in terms of price range today in gold and silver, both trading lower on the day, with silver losing over 64 cents and taking it below $16 per ounce. Gold is back above 1700, but on an intraday basis actually touched upon 1666. We'll talk about that in detail when we look at our charts, but first to the price board. It was a wild roller coaster ride through the last 24 hours as we saw gold briefly trade in the positive last night, and then as quickly as it traded higher, sold off briskly, actually trading to a low of $1,666.20. We did put a trade on that was stopped out about 2 hours after placing the trade, and we'll talk about that in detail when we pull up our technical studies. But for right now, what I want to look at is a 2-week chart. On this 2-week chart, I have a very long Fibonacci retracement that actually begins at the record top at 1900 plus, down to the end of the correction, which occurred in 2015, the end of that, beginning of 2016. And what becomes apparent when we look at that particular chart that is on the lower left-hand side of the screen is the market was able to take out very, very briefly the 78% Fibonacci retracement, which occurs at 1728. However, it was not sustainable and closed well under that. When we look at spot gold, that is trading down about $12.50. It's a fast market, as you can see, but trading roughly at $16.81 and change. Platinum lost $40 in trading today at $755.70. Palladium prices did plummet, down $256 and change, currently fixed at $18.71 and change. And silver also had a sizable loss today, losing about 67 cents and trading below 15, closing at $14.94. That was all within some dollar strength that provided some pretty decent headwinds. U.S. equities as a whole were lower on the day. Let's take a look at our technical studies. But before we look at our technical studies, I do have an announcement to make, and that is that we are building out the site to include more commodities in which you can look at. Currently, we have added Bitcoin to our daily listing. You can see this button right here that says Gold and Bitcoin. You will see silver added soon to the mix, as well as other commodities that we will follow and publish reports on. For any clients that are interested in Bitcoin, you simply click on that button and it will take you to the Bitcoin page, which will give you a chart gallery as well as commentary, and then below it you'll be able to view all of the most recent Bitcoin report. Look for silver to be added within the next couple of weeks. Before I speak to where I think that gold is going, I do have to cover a trade that we took a small loss on, a total of approximately $35. We're looking at a 15-minute continuous contract candlestick chart of gold futures. We can see that it traded sideways just at and under about 1700, but it then started to trade up, breaking above 1707. That was the first cue because we started to go into positive territory, and the piercing line that we spoke about actually for a brief moment turned green and confirmed. That's when I issued the buy signal. We got in at approximately 1714. The market went as high as approximately 1718, but then sold off furiously. You can see that on these 15-minute bars, we had one bar that began at 1707 and dropped to a low of 1682. The market traded sideways and then came in and hit our stop as it broke below 80, taking it to today's intraday low of $1,666 before recovering, and as of current pricing is back just above $1,700 per ounce. So where do we believe this market could go to? It's currently sitting at 1702. It is above a key and critical level. That is the level of 1700. I've marked that with this blue line here. I've also added a description of today's candlestick. Aside from the small upper wick, which is this thing right here, it is very, very hammer-like. In other words, it comes after a defined downtrend. We certainly got that. Even though we got our piercing line, we certainly did not get a true confirmation, but we did get this hammer. And together, that does show the potential for support. The caveat to that is we pretty much had very, very similar or equal highs. In fact, yesterday was just a little bit above today's high, but we certainly got a lower low. So we want to let the dust settle before we actually go in and take on our next position. For the meantime, my recommendation is that we maintain a neutral stance with no active trades in gold. Lastly, I did want to take a look at silver today, which is back below $15 per ounce, currently trading at $14.96 after factoring in today's decline of 65 cents. The chart that we're looking at is fairly long term. Each candle represents 2 weeks in trading. It really illustrates deeply how low this market went a couple of weeks back when it actually traded below $12 an ounce. We haven't seen that in quite some time, and that was after coming off of these peaks at about $18. However, we really need to look at a daily chart to get a sense for where current levels of support and resistance are. I would have to say that there is very strong support that is sitting at the 38% retracement level, which comes in at 1443. Of course, the market is above that at 96. In terms of resistance, that would be the 61.8% retracement level. That comes in at approximately 1616. We could look to buy it if it trades as low as approximately 1645. And we would look for resistance at 1616. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.